Good afternoon, guys. So we are starting with conventions now. After the concepts, we are starting with conventions. There are four conventions only you can see, namely convention of full disclosure, number one. And further to that, we are having convention of consistency. Then next is materiality, and last one is convention of conservatism. Guys and girls, these are obviously in the same range of the accounting concepts and conventions which we have discussed in the earlier lecture. So these are only the four conventions which are the ground realities, and you can say that principles with which entire accounting is going to function. Without this, the accounting cannot be carried on. So let's discuss the first one. What is convention of full disclosure? This simply says that whatever is shown in the books of accounts is going to be fair and complete, true to the knowledge of the owner there, because it is going to be presented to all interested parties in the business. We all know that the objective of financial accounting is to prepare financial statements and to present it for all the owners, creditors, shareholders, investors. So obviously this particular convention says that the information which is disclosed in the financial statement, that is profit and loss account and balance sheet, should be complete, should be full, should be truthful. Along with that, it should be fair, so that the investors can take an informed decision about the business. So that is what convention of full disclosure. It simply means that you shouldn't avoid anything there as far as the material details of the business are concerned, as far as the truthful nature of the business is concerned, may it be profit, may it be loss, may it be assets, may it be liabilities. So complete information should be given to all the interested stakeholders of the business. So that is what convention of full disclosure. Next to that, you can see here convention of consistency, students. Now, what is consistency? We all know that consistency is something very much required to be successful in the life there. So consistency is somehow having kind of meaning, same meaning here as well. So what is consistency? When we are following any methods of accounting, say for example depreciation, we are following the methods of depreciation. We know there are a number of methods of depreciation. So when we are following these methods, we should have the consistency in them. For example, SLM and RBM. We know these are the two popular methods there. That is straight line method, original cost method. Next to that is reducing balance method and written down value method. So you can follow any method for your choice, but at the same time, whatever method has been followed by you for maintaining books of accounts, the same should be carried on. That is what convention of consistency. The change in accounting policies is not permitted here, but it is not like that. It is permitted with the consent of the authorities. Say income tax is saying that you need to change the method of depreciation from RBM to SLM or vice versa, then you can change it. Along with that, method of valuation of inventory, that is LIFO and FIFO, is another one. So LIFO and FIFO, you can go for any inventory valuation method, but at the same time you should have consistency in them. Means once you started follow LIFO, you should start following LIFO only. You shouldn't make the change arbitrary that you are following now FIFO. So that is what convention of consistency. It simply says that the accounting policies followed must be one and the same. If any change is there, obviously it can be done with the concerned authorities consent there. So that is what convention of consistency. The third one is convention of materiality, which is very important. We all know that materiality is something, a subjective concept there. For example, if say maybe gulab jamuns are given to you and it has been tested by you and it is asked to you that how you felt. So some may say that yes, we loved them, we enjoyed them. Some may say that I don't like it. Some may say that no, it is not that much tasty. So materiality is something, you can say that a subjective concept there. One thing is material to one person, maybe immaterial to another person. So in accounting, what is materiality? Materiality is nothing but you can say that you need to record the transaction in the books of account based on whether they are material or not. For example, for a business which is having a turnover of say rupees 20 crore, turnover is 20 crore, and they are doing miscellaneous expenses on daily basis rupees 1000. Say for coffee, snacks, bouquet and all those things for welcoming guests into the office. So they are spending rupees 1000. So for rupees 1000, they may not make entries, so many entries by the accountant there, because for a business of rupees 20 crore, 1000 rupees is not that much a matter of concern. But if the same business or if another business is say having a turnover of rupees 1 crore and they are spending rupees 500 on different things on the basis of bouquet, coffee and different welcome things for the guests there, they need to think on this. They need to reduce this particular expenditure. So one thing is material for one business, maybe immaterial for another business on the basis of your turnover. So on the basis of turnover, obviously, and you need not increase the work of the chief accountant there because of these minute details. So materiality says that record only material transaction into the books of accounts so that the accounts will not be overburdened with the minute details and the accountant will not be unnecessarily burdened with these things. So that is what materiality. But materiality is a subjective concept, as I told you earlier. One thing material for one person may be immaterial for another person. So that is what convention of materiality. The last but not the least one, students, into this particular list is convention of conservatism. It is called as a policy of playing safe. We all know there is a rule for one of the accounting final account things there, that is closing stock is valued at cost or market price, whichever is lower, or you can say that the closing stock which is given into the books of accounts, at what price it should be valued. So it should be valued at cost price or market price, whichever is lower. This rule comes because of this concept of conservatism. It is saying that the policy of playing safe. तो ये दोनों में से आप किस पे वैल्यू करते हैं, लोअर वैल्यूएशन लेते हैं आप क्लोजिंग स्टॉक का. Why? Reason is it hasn't been sold, so that is how it is better to value it at either on conservatism basis, so cost price or market price, whichever is lower. So conservatism says that you can basically anticipate losses but you cannot anticipate profits. So that is something you can say that objectionable there, because if you are imagining losses, why you don't imagine profits? But this concept says that anticipate losses but don't anticipate profits, imagine losses but don't imagine profits. So this is somehow criticized as far as this concept of conservatism is concerned. But all in all, what is concept of conservatism? It is nothing but the policy of playing safe, that anticipate loss but don't anticipate profit. You can say that you can anticipate in the form of bad debts but you cannot anticipate in the form of profits there. So that is how concept of conservatism, and it is criticized on this particular ground that it is imagining losses but it is not imagining profits. So all in all, what are all four concepts, students? You can see that there are only four conventions. Number one is convention of full disclosure, which says that the business should disclose all entire information which is truthful, which is fair, and which is going to give complete knowledge to all the stakeholders of the business so that they can make informed decision about the business, that whether to invest, not to invest, whether to keep the stake there or not. So that is what convention of full disclosure. Second is consistency, students, that any accounting policy which you are following should be consistent in nature. It may be methods of depreciation like SLM or RBM, or it may be methods of inventory valuation, FIFO, LIFO, or weighted average. You can follow anything, but whatever you are following, the same should not be changed unless and until the authorities are going to give the green signal for the same. So that is for convention of consistency. It doesn't mean that you need to be rigid in all times as far as business accounts are concerned, but you can change them only when the authorities are permitting. Next is convention of materiality. As I told you, it is a subjective concept. One thing material for one person may be immaterial for another person. Similarly, one thing material for one business, it may be immaterial for another business. So on the basis of nature of the business, turnover of the business, you can say that the things of materiality and these will be changing from business to business. So it is a subjective concept, and materiality says that record only those things which are very important for the business and will not burden the accountant with very minute details. Say for example, stationery. Stationery in a year which is purchased need to be depreciated in the same year. We will not charge depreciation for a number of years and keep the stationery, so pen, calculator, pencil, and all those things. So that is how materiality says that don't burden the accounts with so many minute details and even the accountant with so much of work. Rather, keep them in a very simple format that accountants will not be overburdened, accounts will not be overburdened, but all material details should be maintained. Now, what is material to one business may be immaterial for another business. So that is the thing. And last one is concept of conservatism, which we have seen. That is the policy of playing safe. And example is closing stock is valued at cost or market price, whichever is lower. It simply says that anticipate profits, but anticipate losses rather, but don't anticipate profits, which is highly criticized. So this policy is nothing but policy of playing safe. So this is all about the concept of conservatism. Hope you are enjoying these concepts in a very short span of time, because earlier we have seen the convention principles there, and you can say concepts, and now we have seen four conventions, that is convention of full disclosure, convention of materiality, convention of consistency, and convention of conservatism. Hope you are enjoying this. Thank you and have a wonderful day ahead. Thank you, students.